Welcome to Searing Ye, and today I'm going to go over a Redfin report dated April the 6th, 2023. The headline by Redfin is Housing Market Update. Demand outpaces limited supply, making some markets feel shocked despite few sales. Before I go any further, let's go over the robust, this ever changing mortgage rate, which is everybody is always they make decisions based on the rates. That is the key metric as always. Today's rate, as you can see right here. In fact, let me open today's rate one more time. Today's rate is 6.34%. So volatility, here we come. That's what's happening. Wow, very interesting. It's up 0.16 basis point from yesterday. Wow. For those of you people out there, we could really overcome the volatility of it and of the mortgage rate and be committed and be courageous and focus on your action plan. Tell me, you are one of the few. This is so mind-boggling. Let's go over the 30-year fixed rate mortgage. Like I said, let's go over the trend to see what's been happening. Wow, it's just very strange. 6.4% is not bad, but we look at what's happening in the past few days from this past week. You see, it has gone down. 31 March has gone down 0.02%, 6.57. Then 2 days later, 6.44. April 4th, 6.37. April 5th, 2 days ago, 6.16. April 6th, yesterday, 6.18. In April 7th, today, 6.34. So that's the new normal. I don't know, but some of you might want to pull the trigger and lock in the rate right now and work with your mortgage loan advisor to buy your primary home or investment property, get financing accordingly. Also say you shouldn't do that because my expectation is that next 1 to 2 years, I could reasonably conclude that the mortgage rates could be anywhere from 5.75% to 7.25%. That is the range that I'm looking at. For anyone to have any unrealistic expectation that the mortgage rate in the next few years will go below 5.75%, you might want to think twice. Any doom and gloom people out there that are thinking the mortgage rate can go higher than 7.25%, you could be unrealistic as well. Giving this range, like I said, 5.75% to 7.25%, you have the courage to make an informed decision to get financing to buy a primary home if you can afford it, of course. If you intend to occupy your house for at least 7 to 10 years long term, you can override this volatility because real estate over time always make you money. This is new normal for anybody that's sitting the sideline because you don't like these kind of mortgage rates or this spread. I just share with you, then you might be sitting on the sidelines for a very long time to come. And that may not be the best decision. That's all I have to say before I go further. Let's get back to this mortgage rate volatility situation. But we look at what's going on with the mortgage rates daily right now, 6.34. But look, back in, we had a 5.99% earlier, a couple of months ago. Then people got all happy, but it went back up. But look at last year, look at October, look at the top right here, 7.1% was high as 8 weeks ago, March the 2nd, and now back down to 6.34%. Year over year, last year, the rate was 4.9%, April 7, 2022, and now 6.34%. You have a full 1.37% basis point increase year over year, April 7. That's what we are seeing right now. With that in mind, let me go back to the Redfin report. What we're seeing is the low inventory means the homes that are for sale are growing fast in some parts of the country. I'm talking to a lot of network partners that we have in main markets like in Florida, in Central Texas, that we have agents that work with us in North Carolina, Raleigh, Durham, and Alabama, a few of the places that we work with on our investors buying cash flow homes. And Las Vegas, same thing. Phoenix, same thing. The lower price homes, the entry level home below the medium price range in these markets, they're getting a homes that are priced correctly to sell, homes that we have properly or turnkey in a good location. They are getting bidding wars. They're getting like 5 to 10 offers per house. And the final list price, the final asking price was typically 5 to 10% above the list price. So we're seeing some offers and mini bidding wars in those lower price entry level homes in many markets. It's really a good sign. Don't let this national headline negativity affect you, because the pent up demand is getting higher, and the level, the supply of home is so, we're reaching a historical low again. I go over that momentarily. On the second paragraph, the Redfin article says new listings fell 21.8% from a year earlier nationwide during the 4 weeks ending April the 2nd. One of the biggest drops since the start of the pandemic. Talking for more than 3 years, almost 4 years, we've seen the largest drop in new listings because sellers are not selling, right? Contributing to an unseasonal early spring decline in the total number of homes for sale. Many homeowners are staying put because they are unwilling to give up their low historical mortgage rate. Buyers are snapping up the homes that do hit the market fast. And it takes 2.8 months of today's supply inventory. In case you do not know, let me remind you, a healthy market, a balanced market in demand and supply demand is around 5 to 6 months of inventory. We're seeing nationwide approximately 2.8 months supply inventory. This means a lot of homeowners, they are locked in at the historical low rate that they achieved back in 2021, or like 3% or less. They're not going to move up. They're not going to be a move-up buyer to sell their current home to buy a more expensive home at a 6.5% mortgage rate. They would be crazy to do that. There's a lock-in effect with respect to sellers or potential sellers. That's why we're seeing extreme scenarios. However, 2021 and part of the early part of 2022, they were record low inventory, 1.9%. Now it's 2.8. The supply inventory is trending downward into below 2.8% supply inventory. So just to show you what's happening. Pending home sales are down 19% year over year, nearly as much as new listings. See, same thing. Pending home sales, active listings, new listings, all are trending downward because the demand, although it's pent up, or unable to meet the few homes out there on the market. That's partly because home buying demand is lower than it was last year, and partly because there are so few homes are hitting the market. Giving up a 3% mortgage rate for one in the 6% range is a tough pill to swallow, said Redfin Deputy Chief Economist Taylor Mann. That's right. The lack of homes hitting the market explains why the market is moving fast, even though sales are still down. The lack of new listings is also one reason why sales are down. Buyers can't buy if sellers don't want to sell. Shiny new listings are getting multiple offers, and selling is really economics 101. Even a slight pent-up demand, as is happening right now, and to start lack of inventory. That's what we're seeing, economics 101. Demand exceeds supply, you will see a bidding war of multiple offers. Even at a mortgage rate right now, 6.34%. Go figure, because there are still sufficient buyers out there that can afford today's rate, 6 to 7%. They are, in my opinion, the last 9 months, ever since the rate has gone up significantly last summer, 2022, until now, a lot of people still can afford it because there's so few homes out there. There are still enough affordability out there for buyers to buy, even at a new. They understand they're tired of waiting on the sideline. They need to move on with their lives. They have the money to do it. They have the confidence to do it. Qualify. That's what they can do. 6.5%, 7%. Giving the low amount of inventory, you will still see pent-up demand. Giving, yes, you get it. There's a 40-year low of home affordability. We all get that, but that's what's happening. Home prices falling in many metros, rising in others. Yes, that is true. Now, it's not all negative. The western region of the U.S., seeing price decreases ever so slightly, but the eastern half of the U.S., prices are stabilizing or increasing. For example, the areas that are increasing prices are such places in Milwaukee, Fort Lauderdale, Florida, West Palm Beach, Miami, Columbus, Ohio. These submarkets are increasing in prices for bigger. And on a national level, U.S. home sales price fell 2.1% year over year to roughly 362,000, marking the seventh straight week of declines after more than a decade increases. Slight decline overall, but more so in the boom and bust pandemic markets in Boston and Phoenix and Las Vegas. They have a lot of volatility in their prices. Data based on home listed and homes for sale, median price was up a little bit less than 1%. Pending home sales fell in all 50 of the most populous U.S. metros. Pending home sales, especially in the areas of the Western region, Portland, Las Vegas, Sacramento, San Jose, have some very steep reduction of pending home sales, not reduction of prices. People sometimes are misread the words. They think pending home sale decreases, home prices increase. No, there's no correlation whatsoever. New listings of homes for sale fell 21.8% year over year, and monthly supply right now is only 2.8% and is trending downward. It was up 3.2 months a month earlier, but it's continuing to go down because sellers are not selling. Let's go with the graph and we should conclude the rest of this video. Median sales price year over year is down 2.1%. Look at the current tracking 2023. So it's trending upward because of the spring season. It's very hot every spring. No surprise there. But the sales price have increased over the years, right? Since 2020. In 2020, the median price is $275K. Now the median $261. So even though this past year has been flat, if you will, during the pandemic earlier, 2 years ago, still home prices are still doing pretty well. Median asking prices up almost 1% year over year, as you can see. So you see the orange line 2023 is above 2022, which is a red line, way above 2021 and way above 2020. So prices are increasing for those people that have the wherewithal to become a homeowner. Home prices have home mortgage payments have increased almost 50% year over year, again, because of the mortgage rate, but still, demand is still there. Pending sales have decreased almost 20%. As you can see right here, down here, at 83,000 homes, pending home sales dated April 2023 is up less than the prior 2 years as well. New listings has decreased, which is 22% year over year. As you can see, 2023, people are not putting their homes on the market. That's why we're seeing all the negative numbers. After listings have decreased, which is very troubling because April and May supposed to be the months every season, the spring season with the highest housing activity. And now we're seeing the after listings going down, which is very troubling. If this trend continue to go down in the next, I know this is a lagging indicator, but in the next 2 months, April and May, if these active listings continue to go down, this means you can see a lot less inventory than we have seen right now. So very troubling. As you can see right here, 2.8% monthly inventory, which is still a seller's market. Let's see how this goes. But nevertheless, the inventory is more than last year, 2022, and more than 2021, but less than pre-pandemic level. So it's trending not very well. The homes that were pending, almost half of the pending sales were within contract within 2 weeks, so, which is good, right? That means those homes are being sold very quickly. Half of them are sold within receive a contract and offer in 2 weeks. So that's good. Homes sold in a medium 39 days, which is pretty good, which is by historical standard is better. Historical standards are way more than 39 days, but you can't compare to 2022, early part 2022 and 2021. Because those 2 years are frenzy. Those are tremendous offer bidding war situations, and homes were sold very quickly during the 2021. You still have 27% of homes sold above final list price. Finally, the home sellers are listing their price much more realistically these days as opposed to last year. That's why their homes are selling fast. Again, only last year, second half last year, there were a lot of price drops because sellers are being unrealistic. They want to list their homes higher than what the market will bear. But now, sellers becoming more realistic. They are listing at price relative to the demand going on out there. As a result, there are less price drops and more quick sales. That's all I need to say right now. My takeaway is if the mortgage rate stays around the mid sixes, we're going to see fairly decent demand because the supply inventory is so low these days. It's almost like 2.8 months of supply nationwide. In some markets, the monthly supply are way less than 2.8. Some markets like 1.5% monthly inventory. I know we talk about very on a national level, But the real estate is local. Every market is very different. Wherever you're located, whatever market you're located, could be a lot different. People I talk to in many areas, entry-level homes below median prices, they're bidding a lot of offers. Nothing crazy like in 2021. You're not getting crazy overbidding. That's never going to happen again, in my opinion. But again, my takeaway is this. For those people who want to stay in the sideline, you might stay for a long time. If you expect the market to crash, anything happening, you have to understand the new normal. You have to accept for the foreseeable future. The mortgage interest rate is going to be anywhere from, 5.75% to 7.2%. These kind of interest rate ranges are not what you expect, and you want to remain on the sideline. Perhaps you could miss out on the future long-term growth of real estate. If you can afford it, if you invest for the long term, then also say you shouldn't buy right now. That's what's happening. That's all I have to say. Thank you so much. If you receive value from this presentation, please smash the like button and subscribe to my YouTube channel. I need to put up my algorithm. As you can see, my subscribing index is way below my expectations. So please tell other people about my channel, and so I could help educate people in a very good way. So again, also visit my website below and drop an email into the form to subscribe to my weekly turnkey real estate investor newsletter. So you'll receive weekly market updates. You become a free member of our real estate investing community, so you can make informed decisions to become a real estate investor. Thank you so much for listening. Have a nice day. This is Siren Yi. I will see you on the next video. Bye-bye.